So I think that obviously the crypto market is super cyclical. Looking at the pitch book data, as far as venture capital goes, it's also incredibly cyclical as well, right? We've had a tremendous downtrend, and now we've had a significant uptick. Quarter to quarter or year to year, 30% increase. That's very substantial. But in the liquid market as a whole, the amount of volume that we're starting to see, both on centralized exchanges and on DEXs and on-chain, has been tremendous. What I will say has been interesting from an on-chain perspective, which honestly, when I first started the company, I didn't really expect to see, was that some of these cycles are now based on chains. Right, and so there's been a substantial movement away from just Bitcoin and Ethereum to now we actually have very large, thriving ecosystems of other chains, and not just layer ones, but now also L2s, for example, right? And that is starting to blossom, not just in terms of number of protocols and users and in their tokens, but also in things like the grant funding, which was just mentioned. And so being able to study and to analyze these cycles, oftentimes this is how investors are intending to make allocations, right? If we're looking at trends over the course of 2024, one of the main things that users of Arkham do is they analyze these different tokens. We obviously support many different chains. I think at this point we support over 10 of them. Many investors are actually looking to try to find where the on-chain activity is, right? That is highly, correlated with the amount of actual dollars that come into the ecosystem. The more wallets that you have, the more transfers that are being made, the more money is coming into an ecosystem. It's very important to realize and to note that crypto is also very reflexive. When it goes down and when activity is going down, it is actually more likely that it will continue to go down, the next day and the next month and the next quarter until there's some sort of reversal. And it's the same thing in reverse, right? If something is starting to tick up and there's more transfers and more activity, there's more liquidity, that then begets more users. And so the ecosystems kind of go through this large pattern where then all of a sudden they become massive, and all of a sudden it's, insert your favorite layer one season, right? And so people are starting to invest there. There's more tokens. People start launching more projects. It's an overall hotter part of the industry, right? And so I think for us and for our users, the number one thing has always been, trying to provide a different lens and a different angle of where the activity and the money is coming from. I think that all of these things are sort of useful pieces of information for investors and for traders. They're all just different parts of the cycle and different parts of data, right? We can look at venture investment. We can look at actual amount of capital being deployed into projects. There's how much the funds are actually raising. Obviously, there's also the amount of money that's coming from LPs and the number of LPs that are entering into the crypto space. And then it shows itself on order books on exchanges. So it shows itself in how liquid things like DEXs are and the amount of trading volume that's actually occurring. Technical analysis, but also on-chain analysis, right? So these are all different tools and different kinds of information that investors can use to try to predict trends in the market, understand where we are in the market cycle in particular, in order to either figure out how to make money or better protect themselves if something negative is going to happen.
That's just amazing, because indeed, what is beautiful with on-chain data is that it just can't lie. So you end up with beautiful stories that you could never heard about if you didn't look on-chain.
So going quickly just on that note about applications of blockchain technology, I think that this is one of the reasons why on-chain analysis is so interesting. With respect to the data and the information that people are using in order to make investment decisions, there's a question of recency and there's a question of relevancy, right? So, for example, when people are analyzing public stocks and public companies, they're frequently looking at information that has a lag, right? There is very frequently something like a multi-month lag, 90-day lag, et cetera, on these filings where, if you have a certain amount of performance in a given quarter, it isn't until the next quarter that it's actually released and then analyzed, things get repriced. And so it sort of creates a certain amount of inefficiency in the market, actually, right? When you have a stock and the stock is trading at a certain price, and then they do an earnings report or whatever, and they're releasing new information about their business well after the information has been known internally, the reason why you get these huge moves in the stock is because there's an inefficiency. The market did not accurately price the information about what was going on. So this is actually a really interesting application of blockchain technology that we have realized, which, assuming I'm not going to say that everything's going to move on chain or that everything's going to move onto tokens or become tokenized. But it is really interesting that with products like Arkham and other on-chain analysis tools, you actually get the information in real time. You have real-time information about the amount of money that is being moved around in a particular ecosystem, the amount of users that are in that particular ecosystem, how active the users are, the amount of money that's being transferred on a daily basis, on an aggregate basis, however you want to look at it. All of the historical information is available. And for example, in the case of things that are built on top of Ethereum, every 12 seconds you have new info about the ecosystem or about the project or the protocol, right? And this is now becoming easier and easier to digest for traders and investors as they continue to use products like ours, right? And so I think that this is an amazing use case for blockchain technology and for projects to be able to build those sorts of tools that allow the general public, the community, and investors to actually understand what's going on in a really efficient, really fast way, even beyond the sort of infrastructure for data that exists in traditional, markets.
Well, I think that says a lot about how our ecosystem is behaving. I mean, if we have new data every 12 seconds, well, that's how fast we are able to move and spot the new trends.
I imagine that this is an experience shared by many different people in the cryptocurrency space, but using traditional financial infrastructure, banks, PayPal, other sorts of applications, it's horrendous, right? It's kind of amazing. I was sitting there thinking to myself, like, if you think about the amount of money that's being held inside of banks and other sorts of traditional institutions. All of that capital is actually tied up and inaccessible for people, especially in places like Europe or the States, for a lot of time. Right, you're not allowed to make money transfers like wires before 9:30 in the morning or after 4:30 in the afternoon, Monday through Friday, and it's completely inaccessible on Saturday and Sunday. Right, and so you think to yourself when people ask you about the use cases for cryptocurrency and for blockchain and where you think that this is going to go, and the fact oftentimes people are very cynical or critical of the industry. Those are the moments when those funds are inaccessible or not able to be transferred, or somebody asks me, hey, what's the status of that wire? Why is it taking so long going cross border? Or I sit there and I think to myself, okay, yes, the gas fees are expensive, but I would much prefer to pay $10 just for this thing to have been settled in 12 seconds whenever I wanted it to be settled than to have to sit here and wait until, Monday at 9:30 a.m. EST for this wire to clear. Right? That is when you really start to see the beauty of crypto and where the industry is going to head over the coming years. The thing that we're missing the most that I would hope continues to grow is builders, and we're missing entrepreneurs. I think that there is plenty of money in the space. I think that there's plenty of capital. One of the mistakes that early entrepreneurs generally make, and this is sort of a piece of small amount of wisdom that I could possibly give someone if they're starting as a founder, as an entrepreneur, is that when people are first getting started on their entrepreneurial journey, they tend to think that the thing that's missing is money. They tend to think that the thing that is very scarce, especially when you're a first-time entrepreneur, very new as an entrepreneur, you don't have any capital, you don't have any way to pay employees, you have no way to build your business, and so it feels like money is very scarce. But the reality is that there's actually plenty of money in the ecosystem, right? Look at SoftBank, the guy sitting right next to me, right? Like, there's plenty of money in the space. There's billions and millions of dollars, right? And so the thing that's actually missing, which I'm sure Neil would agree, is amazing entrepreneurs to deploy the capital into, right? Assuming that there's actually a good business that has, really good properties and is starting to get traction, there's plenty of investors in the space who are willing to deploy money into those projects, right? And so the sort of call to action in all of this, in order to move away from not being able to transfer money on the weekends to actually being able to do whatever you want 24/7, is figuring out a way to bring more entrepreneurs into the space to build beautiful, amazing products that people love to use in order to make these sorts of tools more ubiquitous for everyone.
I absolutely agree, and you are an impressive, amazing entrepreneur, as you described. He's too humble. I think the reality is, from my side, I think I'd really want to also encourage a lot of focus on UX. I think abstracting technology has always been what some of the greatest tech companies that exist today have done very well. And I think making it much more accessible without folks having to jump through multiple hoops and bridges and everything else to get from A to B in this ecosystem, which we enjoy and pay sometimes far too much gas fee for efficiency and speed. I think that's really core and central to what is going to really enable mass adoption in this category. Beyond payments as a very solid use case for what this is. I mean, you think about share buybacks and share cancellation in stocks. And you talked a little bit about quarterly reporting and data availability in this category versus what exists today. I mean, there are some great businesses on chain right now that are buying and burning tokens every hour programmatically. Twitter feeds publishing what's going on. I mean, you don't get more democratized real-time or close to real-time data than that. And I think a lot of new technologies start by looking what the old technology did and then porting it across. I think with what we have here now as blockchain democratized technology, I think there's a lot of new stuff that I can't think of, smart folks like you in the room are thinking about, that actually are only possible with this technology. And I think so beyond UX, I think there's going to be a handful of new things beyond just thinking about, okay, payments could be made so much faster, so much more seamlessly, so much cheaper, and transcending borders and so on and so forth. I think there are a lot of new things that I'm excited to see. I think a few of those have come through, and people talk about, well, we talked a little bit about eigenlayer and how do you port trust and things like that across ecosystems and enhance yield. But there are so many more UX improvements we have to make to really bring folks in, and I'm really excited to see that.